CEDA prides itself on always providing opportunities for our guests to ask questions of our panellists or our guest speakers, and there's no difference, of course, with our economic and political overview today. However, since I have the microphone, I'm going to exercise moderator's privilege and perhaps direct a question to each one of our colleagues first, and then throw it open to general discussion. Julie, I was particularly taken by the fact that the priorities that your membership base sees needs to be tackled is growing. It's not getting less. And I'm always struck by the fact that we have federal budget, taxation reform, and work relations are always pretty close at the top in each of that. I wonder, in terms of workplace relations though, I know we've heard much from the government about what they intend to do, but given the fact that wages in Australia over the last 3 years have grown very much below trend rates, that unionisation in Australia, the latest figures I saw was about 14% and went up to about 17% if you added the public sector. Where is this flexibility, this change in work relations from your members' perspective? Where does it want to come from? What does it want to achieve?
Yeah, that's a good question. As you say, the list grew this year, and I think that reflected the fact that we've seen a lot of reviews from government on these topics, from the Productivity Commission, from Treasury, from elsewhere, but no decisions being made. So in the industrial relations space, we're really seeing the only changes coming are flowing through from the Fair Work Commission decisions. So we're not getting that policy overview approach to change. The flexibilities that people are seeking really relate to being able to respond to those structural changes in the economy. So, for example, businesses that want to change from one sector to another or from one type of production to another. So, yes, we do hear about wage costs, and particularly in the international context, relative wages, but we also hear about, skills flexibility and functional flexibility.
Okay, thank you. John, again, I was taken particularly by the fact that you illustrated what I think we've been hearing and what we'd like to see more of, and that is around Australia's economy in transition. And on the basis of the information you provided to us, you highlighted a number of particular parts of the economy, particularly services and so on, which were going to grow, and naturally we're seeing some of the others that perhaps been mining dependent are starting to fall off. But I wonder if you might just expand a little bit more about what it is about the Australian economy that it's so attractive still to international investors, and how significant international investment traditionally has been for Australia. We have always been a net importer of capital to sustain most of what we want to do, but particularly then reflect back on your comment that money is available through superannuation funds here in Australia for good projects, because that certainly is not what is out there in the broad community. People rightly or wrongly believe that it's foreign investment only that's taking place in this country that will sustain us going forward.
I highlighted foreign investment in particular because I guess I wanted to give us a sense of optimism. If the rest of the world thinks highly of Australia, maybe we shouldn't be too down on ourselves. And it is clear that we have always been net importers of capital. Typically in the last sort of 5 years or so, something like at least 50% of public M&A transactions have involved, or significant M&A transactions, don't have to be public, have involved some foreign participation. Foreigners like Australia, they look at those macro factors that I mentioned. For example, they look at Australia with a 2.75% growth rate, and here we are wringing our hands about it. But if there are lots of places in the world where a 2.75% growth rate would be cause for national holiday. They look at a reasonably a stable environment, low political risk. We worry about sovereign risk, but we don't really have much sovereign risk by comparison with a lot of the other places in the world where people seek to invest. So there's a lot of great factors for foreigners, and that's why they continue to like Australia, and we should, as Australians, be happy about that. The second part of your question is about why the emphasis just on foreigners aren't Australian super funds and Australian pension funds also important. Answer, yes they are, very much so. They tend though, obviously, they're by and large passive investors. Superannuation funds and the Future Fund and our other sovereign wealth funds, QIC, etc., don't typically like control transactions. They recognise that they're essentially investors, not managers, and that's why you don't see them so often in certainly in contested M&A or M&A generally. You're increasingly seeing them in M&A transactions. For example, big pension funds are very interested in joining consortia for assets like, Transgrid in New South Wales, the ports, etc. So you're increasingly seeing the Australian super funds and pension funds investing in major projects, but it's usually they invest alongside an operator or a manager. Where the super funds and Australian investors do very well in supplying needed capital is in those recapitalisations, and those balance sheet repair jobs that need to be done. If you look at when the banks recapitalised last year, big chunks of that is essentially superannuation money. So cause for optimism on sort of both sides of the ledger, both the foreign investors and the big Australian investors as well.
And the message about foreign investment, I thought, was important too in your comments, that it's not just the Chinese that are buying Australia.
Absolutely not. It's the Chinese get most of the publicity, or get a lot of publicity, and perhaps cause more nervousness among politicians and some commentators. But the Chinese are there've been waves of foreign investors. We had the Japanese in the 70s. And the Japanese are still investing. The Koreans are big investors. As I mentioned, sovereign wealth funds from all over the world are, clamouring to buy toll roads and ports and consortia. So it's not just the Chinese, although they're a big player.
Thanks. Warren, mate, where to start with you on Treasury forecasts? Put yourself in the position of, say, the current Treasurer or a former Treasurer, any government trying to make best guess estimates on how to drive the Australian economy, and on the basis of your commentary about the reliability of some of that forecasting, how if there's a major event, we simply don't know how to factor that in. Do you have some sympathy, since you came out of the private sector and only been in the Treasury for a short time, for any of those in the political class expected to make those critical economic and social decisions about Australia's future when there's so much uncertainty around just how accurate those forecasts can be?
Oh, I think that's a good observation, and that applies to most people, whether they're politicians designing policy or companies making investment decisions or people in the financial markets allocating capital. All of those decisions have to be undertaken in an uncertain world about what's going to happen in the future. I think it's just the nature of forecasting that the future is, to a large extent, unknowable. And we've seen over the past 10 years just remarkable shocks to the economy, orders of magnitude. They've all been historical events, and we've been trying to incorporate them into the forecasting process, and it's been particularly difficult. As I said, one of the advances in forecasting over the past decade or so is a much greater focus by the people who generate the forecasts on being more open about the uncertainties around their forecasts, being more open about the risks around their forecasts, and also going back and reviewing where their forecasts were wrong. And the message of that analysis really comes out in the last chart that I produced, which had a distribution around possible outcomes for forecasts. You see that the Treasury, central banks around the world are emphasising much more that, given what we know about the economy, the outcome could be occurring in a very diverse range. It does make it difficult for politicians in that environment, because the press naturally gravitates towards the point estimate of the forecasts and not the uncertainties around that.
Does the advent of the Parliamentary Budget Office, for example, eliminate then the constants that is the political environment in Australia of conflict? The fact that if we could get understanding from all sides of politics around some of the difficulties that you've pointed out here, do you think that, I mean, I know it won't, but I'm asking your opinion, do you think that will take the tension out of the political environment? Are we likely to see a bit more of an acceptance from all sides of politics that if the parameters that have been inserted into budget forecasting somehow don't work out, that this is an opportunity for political point scoring? There's got to be some other reason to sit behind it.
Well, that would be a good outcome if that happened. I think the more forecasters are honest about the uncertainties around their forecasts, I think it's a step in that direction. It's then up to the users of the forecasts to decide whether they use the full spectrum of uncertainties when they're putting their policy decisions in place or their investment decisions in place, or continue to focus on the point estimates of those forecasts.
Thank you. Gary, if I come to you, I was particularly intrigued by the fact that the growth that you're seeing currently in that export barometer is being very much driven by the SME sector, and your emphasis around technology, e-commerce, the importance of technology more generally, and, for example, the completion of the NBN. CEDA, some time ago, when it looked at the future of work, this was in June of this year, made those very points about the way in which the Australian economy was transitioning and the skills and so on that was necessary. From your perspective and from those folks that utilise the services you provide, do businesses recognise that training, skilling, educational opportunities and so on are going to be quite different from the workforce that they employ that are in those sort of SME areas? Because you did talk about, I think, high skill, high wage based sort of groups that make up, for example, advanced manufacturing or some of those smaller and medium-sized enterprises that would export and look to export. And secondly, how can government assist in that process of opening up that SME market, the export market, much more successfully than perhaps some small businesses are prepared to embrace at the moment?
What was the first one again? No, sorry. When I look at what's happened over the last several years, especially with some of the significant growth we've seen in SMEs, one thing that strikes me is the smarts, and that comes with that IP in marketing and design. Several of those major growth customers started very small, and they're quite significant right now. And what we've seen is this capability of the power of e-commerce on online retail, and how Australians can embrace that from down here and go global. And we've got this, I think, incredible innovative group of young people that are going into some of these organisations, and they're incredibly creative. Some of the companies that I've seen, they start very small, and just over a matter of 2 to 3 years, they just exploded, and they just can't keep up with the growth. So I think we've got an amazing opportunity with SMEs. I'll give you an example. You've heard of Flowhive? This is this company that builds little beehives down in Byron Bay, and these inventors came up with this really interesting design where it doesn't impact on the bees; the honey just comes straight out. Anyway, they went and did some crowdfunding, and they were trying to raise, $70,000. They raised several $1 million, and they just can't keep up with the orders. They've got about 30 or 40,000 orders, and they're trying to. I think they've got their manufacturing plant here in Brisbane, and they're exporting all those. A lot of it is going to the USA, and we're delivering those into all parts of the states. That's just one example. There's a couple of major online retailers. If you go and see their establishments, they're all in front of all these screens. They're designing, they're marketing, they're taking quality products to the world, and they just can't keep up with some of the orders that they're taking on. What can government do? Well, get out of the way, I suppose. But also, it's about the regulatory aspects. They need to make sure that they open up more markets, FTAs, and I don't think we've seen the impact of all these free trade agreements that we've signed up just recently yet, but they're going to be incredibly important. How we get into China, for example, on a B2C basis, still it's a little bit difficult with regulatory aspects into China. There's a restriction on the value of items that you can take into China. I think it's about 1,000 RMB, just making sure that we take those barriers to trade down, and make it easier for SMEs to export. And that's why I'm so keen to see this NBN rollout gather more momentum. They're saying it's going to be completed by 2020. Sooner the better, because that'll open up regional areas as well. There's one company down in Cooma called Bird's Nest, Cooma, and they've actually created an enormous amount of employment just in that area, and they're an online retailer, exporting to not exporting to the world, but also a lot of demand within Australia. The other exciting thing that just happened just recently, I think it was last week, the US have raised their low value threshold. They used to have it at 200. They've raised it to 800 US dollars. So anything under 800 US dollars will go into the States duty and tax free. And there's a lot of, as you know, there's a lot of debate as to what we're going to do with our low value threshold coming in, which is currently 1,000, and that's being reviewed right now. So when it comes to governments and regulatory aspects, just simplify it and bring the barriers down.
Thank you, Gary. Okay, now the opportunity for you to ask questions of any of our panellists. If you could just signify who you are and where you're from and who you barrack for, that sort of stuff would be terrific. I have one right here. Thank you.
Thank you, panel. My name is Bob O'Connor at QT Graduate School of Business. A lot of the things we've talked about today have been the economy in transition. So actually, I should say I'm going to pose this to each of you in your different areas of context. Warren, you talked about how difficult it is to forecast in not normal times. I guess the contention I might put is disruption's here to stay. Is this the new normal? And I think that's really the essence of the question I'm posing to you, in that this notion of transition is one of opportunities and threats and disruption, and I think, Gary, you've sort of talked about it in your industry. I'd be really interested in your thoughts on what do you see as the big opportunities and threats, potentially even down to the sector level, because really that's going to drive the economy as we go forward. So your thoughts in that area?
Anyone, put your hand up, please.
Warren, did you want to talk about that at a macro level? I'm happy to talk about individual sectors,
Sure.
but there's a lot of them. Absolutely. Yeah.
No, I guess you're right at a macro level. We are going through a big transition, and the economy's had a lot of shocks, and your observation about disruption being here to stay is certainly the correct one. That can be reflected in the macro level in lots of different ways. Hopefully it's reflected by an acceleration in productivity growth as new businesses develop and more efficient ways of doing existing businesses improves as well. That will have implications for growth and inflation. Those types of things are very difficult to embed in macro analysis because they occur in a diffuse way through the economy. People who are close to the sectors where they're occurring or the businesses they're occurring will be much better placed to get a sense of that. Having said that, one of the things the Treasury does do is does have an extensive business liaison program where we go out every quarter and talk to businesses, and I've been on one for the past couple of days, and the message we're hearing is very much the message that you're talking about, that people are changing the way they're doing business, they're trying to make themselves more efficient and run down costs. That's, I think, still yet to be reflected in the macro data, but it's something that we're thinking very closely about.
I guess in your context, globalisation is playing such a key macro role as well.
Oh, that's right. That's right. It's changing the nature of not only trade flows in the economy. Trade is one area where it's clearly having an impact. Seen Chinese demand for everything go up. It's now benefiting our services sector, whereas it benefited the mining sector for a long period of time. But as John mentioned as well, it's also occurring in the capital account, seeing strong inflows into Australia, and the nature of those inflows are changing as well.
Julie, perhaps from a micro perspective?
Yeah, without going through every sector in detail, I think you're quite right. You know, this whole idea of transition and disruption is a constant. It always has been in economics, and it's just part of economics, really. That's the whole point of the discipline, is explaining all these changes and transitions, really. But this idea of, the whole new technology, new disruption theories, it's about identifying opportunities, as Gary said, and finding new niches. There's whole areas of product categories and service categories that didn't exist a decade ago, 2 decades ago, and they're turning into large areas of employment. So IT, telecoms, those online areas. One example of how it's showing up is the whole focus on business investment, and particularly, capital expenditure data. Everyone's been waiting for non-mining business investment to pick up, but some of those things are playing out at a structural level, in that businesses are investing in online capabilities, they're investing in their telecoms rather than in bricks and mortar. So, it's just a different way of investing and a different way of using the skills that are within companies and that need to be brought in from elsewhere.
Further question? I have one there, and I have one down the very front here. Kerry, thank you.
Kerry Heron, Life Trustee for CEDA. Question, John O'Sullivan mentioned the waves of investment, and a question will come in a minute. Just a little short story. Last year, Alan Jones ranted about the property in Northern Territory that was bought out by the Indonesians, and in this selling of property to people overseas. What he didn't mention was that the vendor was the Sultan of Brunei. And Lord Vestey 100 years ago owned a huge swathe of Australia, and I think over the years there's been the Brazilians, the Yanks, the heaps of overseas investment in agriculture, but over the years it's also averaged about 11%. It just keeps churning. I wonder though, the man in the street is worried about the amount of investment by overseas companies. Is there a sector or should there be any worry about the investment of overseas? And why is it that nobody talks about Australian companies that are investing outside Australia too?
To deal with the last point first about reciprocity, that's a very important point, reciprocity, particularly in a world of lots more free trade agreements. We can't expect other countries to welcome our investment if we close the doors to them. We've got lots of companies that want to invest in China, for example, and the doors won't exactly be wide open if we're unwelcoming of Chinese investment. Having said that, to the first part of your question, should there be restrictions? Should there be some areas of the economy that are subject to restrictions? Well, I guess that's a political question, but my personal view is I think we do currently regulate pretty well investment in those areas of the economy that do need special protection. Anything to do with national security needs special protection and needs special sensitivity, and I think we do that pretty well. FIRB and Treasury, Warren can tell me what Treasury think about foreign investment, but my experience is, the Australian agencies are very alive and understand those kinds of issues. They also understand the special questions raised by state-owned enterprises investing in Australia. State-owned enterprises don't necessarily have the kind of commercial drivers, predictable, rational commercial drivers that private sector entities do, but nonetheless, are terribly important investors. In the case of China, for example, where most investment from China is by state-owned enterprises, we have welcomed that in most areas, and so we should. So I guess the short summary is, I don't want to get into agriculture is obviously a difficult area, a politically sensitive area. I'll leave, my personal views out of it and leave it to the politicians, but that's an area for debate. I think the areas where we would all agree that some care is required are national security, and those national policy issues. But I think we do. I think Australia is a very open economy by and large, and we regulate those sectors pretty well. Don't know if Warren has a different view from Treasury. Maybe he can't say.
No, I just reflect your views, to be honest. I think they're a good reflection of the debate.
Please, thank you.
Matt Grant from the Officer Coordinator General, and Stephen Iberg for Brisbane Lions, Brisbane Roar, Queensland State of Origin team, and I don't give a toss about Big Bash.
Cut him off.
My question arises, at least a couple of speakers talked about growth in the health sector, and also there was a comment about the longer term concern about growth in government deficit. So thinking about spiralling health costs, is there, in the positive in the growth of health sector jobs and development, is that likely, or to what extent is that likely to reflect back on government debt, given that a considerable part of the cost of healthcare in Australia comes back to Medicare, etc. So, is there some sobering cautions that aspects that both the industry and government should be addressing a lot more than it is now?
Yeah, the healthcare industry, as you say, it's growing, but it includes aged care and community services and childcare. Fairly big chunks of the growth pockets are private sector. So to the extent that those areas are being driven by income growth as well as by demographics, there's not too many implications for government budgets. But the areas of critical care, hospitals, etc., that obviously is mainly government funded the way it's set up at the moment. So it's definitely an area that needs to be addressed. I don't think it's realistic to just say costs will be cut, because we haven't been able to cut costs. And I think because of the demographic situation we face, it's probably not realistic to even try to address the expenditure situation by simply trying to cut it.
I'm no expert on healthcare, so I won't dive in there. I guess I'd reflect on two things. One is the demographics that Julie mentioned, that's inevitable with an ageing population. Older people tend to have a per capita higher spend on health over time. So obviously we've got to focus on ways to increase the efficiency of the healthcare sector. But I think there's also a choice element in this, and people are choosing to spend more on healthcare as well as new advances are made. And so we have to balance both of those things, the demand-driven decisions by the population in general and some of the demographic things that we're going to have to confront over the next few decades.
It's an area where you can see the effects of new technologies on almost a daily or weekly basis too. So when we talk about, economies in transition, it's definitely a sector where advanced technology and new technology comes to the fore.
And I would just remind you to have a look at CEDA's report of 2 years ago. Healthcare reform or ration, which will give you a few ideas on how governments could tackle some of the problems confronting the health industry. Of course, you do have premiers that have got different views on this, raising the Medicare levy and hypothecating the money directly for healthcare. You had others that suggested part of the GST debate might have involved that as well. You've got a minister at the federal level that's introduced some changes, particularly around some basic procedures and so on, where costs are going to go up. So healthcare is an issue that's alive and well in this country at the present moment, and will only get more vocal, because I think Julie's right, and I think certainly Warren is right. There are more choices being made by people now, because advances in medical technology mean that we are living longer, we choose to want to live longer, and if we can prolong that in a healthy lifestyle, that we're going to involve ourselves in taking everything from healthcare products to whatever else it might be. So it's a long debate. I'm mindful of the time and know that we are going to move to the next room shortly. I have time for one final question, and it is right there.
Thank you. My name's Susan Pienaar from Queensland Rail. I'm just interested, Julie, in your comment around skills shortages. I note in the graphs that they're actually of more concern now than in the last 3 years. What would be your explanation as to what the sentiment is? Is it that there is an ageing population, or is it a skills shortage related to new skills for the digital age, or is it that government haven't invested as much as they possibly have over the years in skills development and training? What's the major sentiment amongst your members?
Yeah, that's a good question, because education and training is vital, of course. The main areas of skill shortage that we see consistently are the STEM groups: science, technology, engineering and maths. So, that's true for the technology areas, transport and logistics, industrials. Most industries do need people with those skills. At the bottom level, we also hear about language and literacy and numeracy still creating barriers at the lower skill levels to being able to move people up and around within a company or into new roles. So there's two aspects going on. The third one, which is unique to manufacturing, manufacturing to some extent suffers a bit of an image problem in Australia, particularly for the sectors that are still large but are shrinking. So what we're seeing is this paradox of a shrinking total workforce in things like metals manufacturing and particularly automotive, and that shrinkage actually is a negative for attracting people into those industries, particularly younger workers who are more attracted to banking and finance and other areas that are a little bit more glamorous and less grubby.
And I'd refer you to CEDA's report of April of last year on advanced manufacturing. You'll get some insights into the nature of which Australia's manufacturing industry is very much changing, and we've got to change some of the language and the perceptions around just where opportunities for growth in the Australian economy actually lie. And I'd also refer you to the Minister for Education in New South Wales' comments yesterday suggesting that universities should stop accepting people into training programs for nurses and school teaching because we have too many of them. Interesting point of view. I'm sorry, but that's where we're going to end. To thank our panellists, can I invite Cole Murphy back to the podium? Thank you.